Traders, welcome back to the channel. Today we're going to be talking about a few stocks that I like on the market, things that have been doing pretty good despite somewhat of a downside over the past few weeks. I've been looking for some more sleepers, trying to find some big hits along for the end of the year. So let's not waste any more time. Like, subscribe, do what you gotta do. Let's get to it.
I got no drip in my pocket.
Alright, so I'm going to do a very quick run through of just the picks that I'm really liking, give you a quick synopsis, things like that. A lot of these I have done full coverage on the beginning of last year. I think you're seeing some of a rotation back into some of these low cap plays, and just the longer horizon, that's what I'm looking at right now, just the overall trend of what could be happening and shifting if the market really does start to get a bounce back. So first we're looking at FUBO, Fubo TV. Now I'm going to take you out really quick so you can just see the long scale of exactly what's going on. In my opinion, you saw a massive run back in May all the way through end of June, give or take, to 35. You've been flagging back to the downside, and it looks like you want to push back up. They did have earnings. They're constantly showing more subscriber growth. Revenue is always going to be the issue there. They are making progress with the gambling service as well. They already have their first, I think it was on horse racing or something like that. So they're making steps in the right direction. So overall, I think the trend is definitely shifting back to the upside, especially over the overall growth that we've seen in these sectors again and again and again, and especially over the course of 2021. So going into this, you're already over the 200 EMA. That's really big there on the 1 hour. You're pushing back up. I do think you will most likely make new highs if you break out of this channel, which I do think you will. The first level we're going to be looking at is 29.5. That's going to be a heavy resistance, but ultimately the goal for me would be at minimum a double top 34.5, give or take, always being a little bit conservative with taking profits there. But I do see 37 being a huge level of resistance, and then after that, I've had this marked out since last year, or the beginning of this past year, was 42 roughly. Now, I'm not saying you're going to push there in the next 2 weeks or anything like that. I want to give broader aspect looks of plays and things that I think are going to be looking good over the next few weeks and months. Right now, when you're trading, it's a lot of day trades that you're getting in and out of when you're actually trading options in the market. These are more longer dated positions, things that I'm looking at, stocks to just keep your eye on. Next one we're going to look at is actually going to be Denison. This is something about right now. If you've been following me since last January, February, we talked about them at $1.20. When they had that first run up, they dipped back down. This has always been one of those pennies that I liked. I always thought that they were a legit company. We always knew uranium. We needed that in their portfolio. So I've kind of accumulated more and more of these guys. Over the past year, you've seen just pure stagnation really over the course of the past 10 months of just between 150 all the way down to about 95, 97 cents. But over the past month and a half, you've really seen a push from about $1 all the way up to $1.80. And now this is becoming a key factor with what's going on with energy globally. You've seen China ramp up their purchasing. They're buying coal, uranium, everything they could possibly get their hands on. Now energy has become a very good store of value, or a good hedge against really anything with what's going on with inflation globally. Everyone's stocking up. It's not a coincidence. Inflation is here, and it's most likely here to stay for the next few years. So Denison, pick number 2. I like them a lot. I'm not giving any targets specifically, but I think they're going to start breaking out these local highs, probably pushing $2.50, $2.60 roughly over the next few months, especially if the buying continues. Next one we're going to look at is going to be FedEx. Now, these guys have been on my radar for the past week and a half. If you know anything that's going on with shipping, obviously there's a huge shipping crisis, and we have ships just stuck in the Atlantic. We can't bring them to the docks. There's huge problems and shortages globally, and it's just a huge problem right now. Now, what I will say is that I do think this has a great opportunity to start running going into the holiday season. Holiday season is always a great time for shipping, UPS, FedEx. So I easily think this could start running from 223 all the way, not even to fill any sort of gap, at around 234, 235, just that bottom level of support, and you haven't even seen a retest of it. That in itself, in my opinion, is fairly safe over the next few weeks. Going past that, I think this definitely could start to gaffle towards 250, possibly run to 266 just over the course of the next few months. Now, you've seen a lot of these companies been taking a huge, massive, literally the past 5 months, FedEx just been going down. UPS competitor, obviously not doing as well either, really steeper drops, even with some of the bad news surrounding FedEx, but it's actually making somewhat of a push back up going into earnings. And I do think expectations across the board for FedEx and for UPS will get larger over time just going into the end of this year. It's kind of like nothing else terrible could really happen. So it's like you're playing for any sort of news because most of the news coming out most likely will benefit the stock as a whole. All right, and the last ticker is going to be DNUT, and it's not D's nuts. So going into this, I know a lot of people think this is kind of like a joke when I'm talking about Krispy Kreme whatsoever. However, what I will say, the last time I had a really good gut feeling on these guys, they performed to a crisp, no pun intended. You push to $17 from that local $13, $14 range. Now you're making a pretty solid bottom down here. I do like that. You're also mounting the monthly. You pushed up, you mounted, now you're pushing here. Surprising that you're seeing any sort of dip. I do think the market's looking very good right now. I think Krispy Kreme has room to run. $15.5, $16 conservative. Possibly go to the monthly level of last month's. However, that's being a little bit optimistic. Realistically, I think 16.20 down to 16 is the target. All right, so obviously some of the picks on the past few weeks have not been in for me. You're going to have the down weeks. You're going to have the down months. But you got to stick with what works for you. You got to stick with what got you to where you're at. And that's what we're doing here. We're trying to find high value plays that are sitting at key supports and are already having a major dip. That's what I'm looking at. I'm looking for breakout players, and I want to get another big win. And that's what we're doing and what we're searching for here on the channel. Like, subscribe, do what you got to do. We'll be back tomorrow. And you know what, boys? It's getting a little hard to say it, but we run the market.
But I'm about to take off like a rocket. Houston, we might have a problem, but that don't mean money.